All right, everyone. Welcome back to the Charts Focus One live stream. Let's bring this music down. So I just want to do an impromptu live stream and give you guys kind of a quick breakdown as to what has occurred today. So let's start off right off the bat with SPY. So the S&P 500 dropped and closed at negative 2.38%. And so we've had yet another big move to the downside. With all the leaders, and actually today, most sectors being red, including the defensive and value sectors that usually tend to see, some green, right? Some good buying coming in. But oh, sorry guys, I had a little feedback there. There it is. Okay, I think I muted that feed. Okay, good. Why did that even turn on? All right. So, for the markets, it just seemed like today was everything needed to sell off at a very low volume, okay? Because if you take a look at the volume today, it's a lot lower compared to Friday, compared to Thursday, but it's still a little bit elevated, but obviously that's just due to the day-to-day changes, right? So for me, at this point in time, it seems like the markets are really just not confident in the overall trade war and tariffs that are going on. And we've seen this, right? We've seen this uncertainty hitting gold, right? As people start to pile into gold here, and it's going parabolic. And gold has, if you guys didn't know, has been moving straight to the upside since, 2 years ago, right? They go all the way back to 2022, to 2020, 2021, right? There's this massive consolidation that has occurred for about 3 years here, from 2021 to 2023, and that's when we had that very big move or breakout to the upside over this 193 resistance level. And so it's more than doubled since then, and almost doubled since then. And it just seems like this move here is just gold's obviously a bit overbought now, but when it comes to this uncertainty, people are just, it almost seems like a FOMO, fear of missing out from the opposite end, right? Where people are missing, or if they're just fearful of the fact that they might miss out on being uncertain, right? On being fearful and being doubtful of what the current administration is doing. So, it just seems to me that this might be just a little bit overdone at this point in time, but the markets continue to be very, very, not trusting of the current words that we're hearing from Trump about the fact that we're having these negotiations on the table being done, or the fact that other countries are willing to do these negotiations with us. And so the markets have continued to move lower on that fact, and we've basically, at the lows of today, gone past the halfway point of that big tariff pause day, right? That 90-day tariff pause that we had 2 weeks ago, that news. And so this isn't looking good, obviously, right? We don't want to see a retracement of the price going all the way back down below the 50%, or at least the halfway point of this entire big range that we saw 2 weeks ago. So again, we should be cautious here. We're definitely in a downtrend for the short, midterm, and long-term perspectives. And overall, VIX continues to stay bid, right? VIX is the volatility index of the S&P 500. And it just seems like we just made a simple higher low from last week as well on this weekly time frame for VIX. And everything just seems to be at a standstill with the markets not believing what Trump is saying at this point in time. And as long as the bears remain here and they continue to hit that supply, essentially, we're going to continue to move lower. And so, apply that bulls need to get over if we were to continue to have a potential signs of reversing. There has been signs here and there. I've been putting that in the CFO Swinger Watch Report for the past 2 weeks, including the private CFO Discord chat room as well. So it just seems at this point that selling may seem overdone, but it might just just be that the markets really are just wanting to discount and just price in the actual economic consequences that we will be facing in the next year or two, and whether that be a recession or even a depression, we don't know, right? But at this point, we're definitely looking like we're trying to head towards a recession, and it seems kind of unavoidable at this point. And the bond markets like TLT, as I've written in the description down below, right? I want to take a look at this as well, but yields and bonds have been absolutely gone into destruction mode. That's exactly where we're at right now. I think did we cut off for just a second there? Hopefully not. Okay, I think we're back. Yeah, we're back. Okay, so this just seems like with the bond markets being absolutely obliterated, and it continued to move down. I mean, today the bond price is TLT, right? The 20+ year Treasury bond ETF. Just another big gap down and another push lower, ending at nearly -2%. And bond yields, right, like the 30-year, it just continues to move up higher. Made a perfect quote-unquote bull flag on here, and we're looks like we want to go back right to the highs that we saw last week or 2 weeks ago, right? And it seems like yields will just continue to go up to that 5% and possibly even to that 7% that people have been touting about online. And those rates or those yields are, to me, it just seems like we're pushing. We want that recession, right? And TNX as well, the 10-year has been pushing back towards that 5% as well too. So that 5. So it's just, again, things are just not looking too good, right? And that's kind of my point here. I can go on and show you guys all these different tickers and these indications of what we should be expecting in the short, midterm, and long-term perspectives. But again, the grand picture here is that things aren't looking good, right? Commodities like gold, the safe haven tickers just continue to go up higher, and even XLV, right? Obviously, silver has a lot more room to catch up to gold, but gold has been the major player here for the safe haven assets that investors have been piling into. So with all of this in mind, okay, let's take a look at SPY again and take a look at some levels, right? So SPY was able to uphold this move back down and go. It has been able to come back up to this 512 level, which I've been looking at this entire day, and we retested it and we moved a lot lower below it, and we fortunately were able to push up higher at the end of the day. I think of the last 30 minutes here of today, and it seems like futures market just opened and it's already active. By the way, SPY is moving after hours, and this push up into the last 30 minutes of trading seems a bit fishy. It might just be that we might be getting another tariff, maybe another tariff pause, since this administration is actually looking at the markets now. If you guys didn't know, Scott, our Secretary of Treasury, he's I don't know how to say his last name actually. Let me see. Let me make sure I'm saying his last name right. Right, Scott Bessent, right? I don't know why I keep wanting to say Bessent, but again, this is the Secretary of Treasury of the United States, right? Scott Bessent, and it seems like he was or has been tracking the bond markets, and he got pretty worried. And some news came out that he was one of the major players into having Trump basically convince him to say, hey, let's kind of calm down on these tariffs and look for an actual pause to some tariffs. And so hopefully, maybe some insider knowledge came in today at the last 30 minutes, and we may be getting some sort of a midweek news that tariffs are going to be paused, right? Maybe some countries will get a full-on pause. Who knows, right? But as we've seen 2 weeks ago, there's definitely some relief trying to come into the markets whenever we do get a news like this. And so it seems like the market makers are all definitely tired of this news cycle, and they're definitely worried about how Trump is just on this crash course for the overall economy as well, and global economies, not just in the US, right? Since the free trade networks that we have developed for the last 3, 4, 5 decades and has been completely obliterated right now, as the United States, which is the pinnacle of the world free trade markets, is slowly regressing back towards isolationism, mercantilism, and all the other isms that I've talked about in the past couple of weeks and months, and even late last year. So, this is where history comes into play, and the reasons why I've been so focused on objective data and history, and it just seems like everything is becoming true here and coming into fruition as what I've talked about late last year, as I was worried about this new upcoming administration and what they will do to the overall economy. And a lot of the Wall Street analysts and just overall Wall Street was completely blindsided to that fact for some odd reason. I don't know why, but it most likely should have been the political bias that they may have probably had, in my own opinion. I'm pretty sure that's the fact at this point in time, which is why some hedge funds and institutions were overtly leveraged into this new year. And so, while on the other hand, for CFO Swinger Watch Report readers, we continue to hedge, and we brought up our cash amount, right? And I still stay mostly cash here. And whenever I decide to trade, I make sure my risk is infinitesimally small, right? Very, very small. And that's exactly what you guys should be doing too, and not trying to go all out and just trying to play both sides here. If you're an active trader and that works out for you, great. But for me, that's not for me, right? And again, CFO Swinger Watch Report there's a reason why we call it a Swinger Watch Report, because we're looking at the longer term time frames and kind of the bigger picture. So, SPY just continues to be in this waterfall move. I don't see an end here unless Trump completely himself declares that these tariffs are not, it's not working out. But again, that's not going to happen, right? At this point, Trump is acting like a baby. And he clearly is. If you guys don't see that, then I don't know what to tell you, right? This is just from an objective standpoint when it comes to these tariffs. And, he's touting that we're bringing in, billions, but that's not true, right? So, again, like I've said in the previous report, it just simply seems theatrical. And the markets do not like that because the uncertainty that surrounds such theatrics when it comes to tariffs. Overall, I think the overall markets and Wall Street just completely overshot their expectations for this new upcoming administration. So, with that in mind, I think SPY is most likely going to come back down and break below the lows that we saw in early April, so 2 weeks ago. And eventually come back down to at least retest 460. This is the next major line in the sand level that I have for SPY. That's going to be breaking below the highs that we saw in 2022. And that will most likely going to be our official kind of max pain point for the overall markets. And so if you guys want to take a look at that from a percentage perspective, 413.88 was our closing price here. And so roughly speaking, if you go back down to this level, this 460 level that I'm talking about, that's another 10% drop, right? So we need to be prepared for this. And if you're staying cash, awesome, right? If you're staying mostly cash, that's awesome. And if you have some defensive positions, keep that. I'm sure they'll do great in the next couple of months. But overall, I think we have another leg down still for the markets. Obviously we're going to have these tariff pauses and news that will most likely come out, some positive news that will be captured by the markets through a bounce, but overall it's not gonna be too good unless Trump does something drastic about these tariffs by lifting them, which I don't think he will, because he's acting like a baby with these tariffs. What can you do, right? What can you do? All right, let's talk about the major ticker for tonight. Okay, QCOM. Alright, so QCOM was our official swing trade idea, or just overall trade idea, depending on how you want to take a look at it, from the analysis that I provided in the report. And QCOM has been actually, pretty strong today, as a matter of fact. It did end up in the negatives at negative 0.38%, but that is a lot better compared to the overall market and how the other leading semiconductors did as well, like nvda or AMD. So QCOM definitely seems to be a ticker you want to be looking at for the rest of this week and into the far future as well, because of the fundamental analysis that I provided in the report itself. So for all the readers who are watching this video now, make sure you guys go back to that report and read it once again, right? And make sure you guys choose the time frame that fits your own trading and investing goals on QCOM and figure out where you want to go from there with this ticker, okay? But for the time being, for the sake of this video, this live stream, okay, or this replay for anyone who's just watching this on the replay as a video, I want to go over the technical analysis real quick for QCOM. So first of all, let's take a look on this from the monthly time frame, right? So QCOM had a pretty quick fall once it broke below this 152 level, right? And it had a very quick move down, as with all the other semiconductors, and it came back down to retest this 122 support level. That was a major level, kind of a midline level for the last half of 2022 and for most of 2023. And this is a level where there's a lot of back and forth as seen here by each of these individual monthly candlesticks. And so, there's a nice retest and a nice quick pivot, very quick pivot in this month of April alone, obviously due to the fact that we also had a pretty good bounce in the overall markets, which has helped QCOM with this pivot. But again, this was also an individual move back down to 122 and a very nice retest for a pivot back to the upside. But if we are to see another 10% drop in the markets, QCOM will follow, because unfortunately it is in a leading group, which is the semiconductor group, right? So, if we do see a further drop and semiconductors are hit a lot more compared to the other leading groups like software, QCOM will come back down to retest 102. Right, and that's the reason why I gave you guys a long-term entry point for a bounce at 102.10, because that is the actual low that we saw in 2022, and yet another low that we saw in early to mid 2023. And if we do retest that, well, QCOM will be sorely undervalued, and I gave you guys the reasons why in the report itself. So please make sure you guys read that. Again, I gave you guys the fundamental reasons, the fundamental metrics. That's the reason why QCOM itself, currently at where it's at right now, from its share price, is undervalued. But if you go back down to 102, it'll be extremely undervalued. Okay, so, and if you guys are wondering what I mean, or what perspective of undervalue of QCOM, or what time frame that I'm talking about for QCOM when I say undervalued, well, it's the long term, right? So 3 to 5 years, or even more than that, maybe a decade. Okay, so QCOM here, if it does reach 102, definitely an immediate buy for me, right? But right now, again, QCOM itself is still undervalued, believe it or not, right? It's come back down to even more attractive levels, and the strength that is showed today, the relative strength, the overall RS, right, that is displaying right now compared to the other leading semiconductors is just phenomenal. And today I was able to close over my daily 10 SMA as it continues to try to consolidate and form this overall wedge chart pattern, right? And wedge chart patterns are usually neutral, but based on what I've seen so far off of QCOM's or Qualcomm, QCOM, right? Fundamental metrics, it just seems like it's ready to move back to the upside, right? And I really hope that QCOM is able to hold this wedge, and it's able to provide us with the breakout to the upside rather than to the downside. Since again, it is a neutral chart pattern where it can provide us with a breakdown and a break to the upside. Again, it could be either way, right? As long as we're able to continue to tightly move in between the parameters set up by this descending resistance trend line and this ascending support trend line, we should be good to go. Okay. All right, so again, QCOM, awesome display of relative strength, completely confirming the reasons why I wanted to have this in the CFO Swinger Watch Report this week. So hopefully, for any of the non-readers out there, you guys can join us by using the link down below, okay? And just check us out, right? Check us out and see why the CFO Swinger Watch Report can be useful for you guys for your trading goals and your trading journey overall. All right, so that's kind of what I wanted to talk about for tonight. Just a very quick live stream for after hours trading and market hours, and give you guys an insight as to what we're looking at for this trading week for my CFO Swinger Watch readers and the private CFO Discord members. Okay, and yes, there will be a live stream tomorrow at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Good luck tomorrow, and thank you so much for watching.